Before we dive in, just a quick disclaimer, I am not a financial advisor. This video is for informational and entertainment purposes only and is not financial advice. Always do your own research and never invest in anything based solely on what you see on the internet. Now let's get into it. So guys, 2025 has been quite the ride. We've definitely seen our fair share of ups and downs this year. Unfortunately, there have been more ups than downs. But as we wind down the year and look ahead to 2026, I thought that now would be a great time to take a step back and review my portfolio's performance. Take a look at the highs and lows from this year. So in today's video, we're diving into my biggest needle movers of 2025. I'll walk you through my 5 worst performing stocks, my 5 best performing stocks, and we'll take a look at the total profits and losses from each one. But before we get to that, guys, I want to hear from you. Leave me a comment below and let me know what were some of your best and worst performing stocks here in 2025. I'd be very curious to hear if we have any of the same ones. Now starting here with my worst performing stocks for the year, my 5th worst performer was actually Vici Properties. And taking a look at their share price performance over here on Snapstock, which you can start using right now for all of your stock analysis and research. There is a link to Snapstock in the description of the video and also in the pinned comment. As we can see, in the past year, Vici Properties is down about 1%, so the share price is seeing a little bit of a loss, which if we take a look at my position over here using my dividend portfolio tracking spreadsheet, which you can start using for free, just like with Snapstock, there's a link to download this spreadsheet in the description of the video. I hope you check it out. But right now I have 182 shares of Vici Properties. I've been buying this one left and right lately, really swooping up those shares, and my average cost per share is $28.79. So right now I am seeing a little bit of a loss on my position. I'm down 3% just looking at the share price, but I'm still up a little bit, including dividends on a total return basis. Still, Vici Properties has subtracted about $300 from my portfolio value this year, but we almost made all of that back in dividend income. In 2025, I brought in $236 from Vici Properties, which when we add these two together, the total loss comes out to minus $63.67. Nothing too crazy there. Now moving on to stock number 2, this is my 4th worst performing position, and this was actually Williams-Sonoma, who was my top dog in 2024. My, how the tables have turned, but in the last year, Williams-Sonoma has seen a pullback of about 6.6%. Now, if you're at all familiar with my portfolio, you'll know that Williams-Sonoma is by and large my best performing position. Of all time, I have 36 shares of this company at an average cost of just under $67 per share. And right now, the current share price is almost 3 times my average cost, which is going to leave me up still, close to 170% just looking at the share price, and a bit more including dividends. I'm up about 176%. So those dividends give us a nice little boost. Now, as far as my losses for the year, my unrealized losses in the share price came out to $160. So really nothing too crazy there. It was actually a pretty solid year of dividends. With Williams-Sonoma, I brought in almost $92, and when we add these two numbers together, that's going to leave my total losses just a few dollars more than what we saw with Vici Properties. My total losses with Williams-Sonoma comes out to $68.42. Now moving on to stock number 3, this is the 3rd worst performing stock in my portfolio. This one is Watsco, and I just recently added this one a couple of months ago. Right now we can see the current share price is $340 per share. I started buying Watsco somewhere right in here, like around $360, $370 per share, somewhere in that range. And right after I started my position, guys, what happened? The share price just kept going down and kept going down. But when it comes to Watsco, when it comes to this new position in my portfolio that I am still actively buying, I actually don't mind seeing the share price continue to go down as I'm accumulating more shares, because what's happening is as I'm buying more shares at these lower prices, I'm lowering my average cost per share along the way, which is a good thing. And at the same time, I'm also buying these new shares at a higher dividend yield, so I can stack that passive dividend income even faster. As you guys know, the rule of thumb when it comes to passive income is the more the merrier. And if you're interested in adding another passive income stream to your repertoire outside of just investing in dividend stocks, then you're going to want to check out Limits Express Company, which is actually the sponsor of today's video. And I want to tell you a little bit more about them. So earlier this year, I started selling products on Walmart through Walmart WFS. In a nutshell, that's Walmart's own service that lets you set up a storefront on their website, send inventory into their warehouses, and then they handle everything once a customer places an order. They store the products, package them, ship them, the whole 9 yards. Now, the big question around all of this is, okay, well, how do you even know which products to sell, and where do you even get these products? I mean, how does all of this work? And that's the cool thing about how I've been running this. I've been working with Limits Express Company, who's managing the entire thing for me. Thanks to them, I don't have to lift a finger to run the store. It's completely passive and hands-off, and from the time I made my first sale in April until now, these are my results. As you can see, the returns aren't too shabby, and the only thing I had to do was put up the money for the inventory. Other than that, Limits Express takes care of everything else, from sourcing the products through their supplier network to shipping them to their own warehouse where they repackage that with your store's information and then sending that inventory into Walmart, where Walmart then handles the fulfillment. Now, the cool thing about working with a company like Limits Express is that they're working with multiple clients and they're placing these really large orders in bulk, which means they're able to negotiate top-tier pricing on all of this inventory, which means better margins when you sell it on Walmart and ultimately a higher return on your invested capital. And just like how I document my dividend investing journey here on YouTube, they're documenting their Walmart business over on their channel. They share educational content about Walmart WFS and post regular updates showing how their clients are doing, which I think is really cool to see, and I'll include a link to their YouTube channel in the description and also in the pinned comment. So like I said, they're very transparent and their incentives are aligned with yours. They only make money when you make money, so they are just as motivated as you are to get good results. And so far, as you saw a moment ago, I've had great results working with them. With all of that said, if you're interested in learning more about generating passive income through Walmart WFS, just click the link in the description of the video or in the pinned comment, or just scan this QR code right here to set up a free 30-minute Zoom call with Kyle, who's one of the co-founders of Limits Express. If any of this sounds interesting to you, I genuinely think the best way to go about it is just to outsource it to the pros who live and breathe this stuff every day. So definitely set up a call and start building another passive income stream with Limits Express Company. But anyway, guys, getting back to it, looking at my Watsco position right now, I have exactly 22 shares at an average cost of $368.08. And I think when I started my position, like I said, it was above $370 per share. So by continuing to buy the dip, I've brought my average cost down probably $5 or $6 from when I first started this position. So I definitely don't mind that. We still have a little bit of a ways to go to close this gap, but nothing too crazy. It looks like, just talking about the share price, I'm down 7.4%, including dividends. I have not received many dividends from Watsco yet. I'm still down just over 7%. And as far as the dollars go, my total unrealized losses come out to just under $600. So that kind of stings considering it's a new position. These losses are starting to get a little bit more up there as we continue on in the video, but my dividend income so far with Watsco is only $21. And when we combine these two, my total losses so far with this position come out to $578.28. But it is all good, guys. When it comes to Watsco, or really any of the positions in my portfolio, I'm in it to win it. I'm a long-term shareholder, and at the end of the day, you know, a 7% loss really isn't anything crazy. That's definitely nothing we cannot recover from. And I feel really good about this company from a long-term perspective. So that's what I'm holding on to. And I am very happy to finally be a Watsco shareholder. All right, now moving on to my second worst performing stock of 2025. This one was Procter & Gamble, and I've been talking about this one a bit more lately. I know Procter & Gamble is on a lot of your guys' radar as well, seeing as the share price is now under $140 per share, and it looks like it took quite a big hit today as I'm recording this video. And over the past year, Procter & Gamble's down over 11%, so a really big drop for this dividend king. And with this drop, this is going to leave my position down in the red as well. I have almost 48 shares at an average cost of $144.35, so the current share price is about $6 below my average cost, which is going to leave me down, 4.2% just looking at the share price. Still in the green a little bit, including dividends, still up about 2%, but that's really nothing to write home about. As far as the unrealized losses go, the share price returns were down over $1,000 this year from Procter & Gamble, down $1,017 to be exact. And we got some nice dividends this year from Procter & Gamble, almost $140, which when we add these two together is going to bring the losses to $878.54. It's starting to get up there. Now with those four behind us, this is going to bring us to the worst performing stock in my portfolio. And this one, man, this one has stung. This is another newer position in the portfolio. And this is another one I've been talking about quite a bit lately because the share price just cannot catch a break. This one is Zoetis, now sitting at $118 per share. In the past year, Zoetis is down over 23%, a really big drop for this company. And Zoetis is just by and large my portfolio's biggest loser right now. I have 64.5 shares at an average cost of $146.88. However, before this, it was a bit higher. I think before I did all the recent buying I have been doing, the average cost per share was around $153. So we've been able to bring that down quite a bit, which feels good. But still, like I said, the share price just can't catch a break. Right now, there's a huge spread between the current share price and my average cost per share. And this is going to leave me down 19.5% with Zoetis, just looking at the share price, and including dividends, I'm still down 19%. Now, putting that into dollars, the unrealized losses come out to $1,852.26. So a really, really big loss from this company. And the dividend income this year absolutely did not offset the unrealized losses. I brought in $55.63. And when we add these two numbers together, that's going to bring my total loss from Zoetis down to $1,796.63. So a really, really big loss. And like I was saying with Watsco a few moments ago, I am in it to win it with Zoetis. When I look at this company, I see one that is still really fundamentally strong. The company is still growing like a weed. So I'm really happy to be a shareholder. And I will say at this point, if we look at my position, it's now, 8.25% of my total portfolio, or at least here in the taxable account. So it is starting to get up there. I don't know how much more I will be adding to this position. So with that said, I would not mind if the share price turned around and started going back up from this point. We'll see what happens though. At any rate, guys, those were the worst performing positions in my portfolio. And next, we're going to jump over and take a look at my best performers this year. So guys, my fifth best performing stock in 2025, believe it or not, was Realty Income. In the past year, the share price was up about 11%, so some pretty solid performance from the monthly dividend company. And right now, my position is looking pretty good. I have almost 110 shares of Realty Income at an average cost per share of $53.58. So there's a few dollars spread between my cost basis and the current share price. That's going to leave me up about 7%, not including dividends, and on a total return basis, I'm up 23.2%, so looking good. Now, as far as the profits this year go, my unrealized gains from Realty Income came out to $471.11, and I brought in some nice dividend income from this company this year, $318.04, and when we add these two numbers together, that's going to bring my combined profits to $789.15. But anyway, guys, moving on to my fourth best performing position, this is Clear Secure, who had a really, really solid year. Clear was up 32.6% in the last 365 days, which is going to leave my position in great shape right now. I have 128 shares at an average cost of $28.91. So if we look at the returns, I'm still up 12.6% just looking at the share price, or 15% including dividends. So we get a nice little boost from those dividends. Now, looking at my profits and dividends for the year, my unrealized gains came out to $820.67, and I brought in $77 in dividends, which is going to bring the combined total between those two numbers to $897.70. Not too shabby. Now, moving on to my third biggest needle mover in the portfolio, this one is SCHD, who definitely didn't take the cake as far as share price returns go. It was only up 2.3% in the past year. But in terms of dollars, as we'll see in just a moment, this one actually did move the needle for me quite a bit this year, and a lot of that, or most of that, is only because it is the largest position in my portfolio. So you kind of do have to take that with a grain of salt. And on that note, looking at my position, I have 496 shares at an average cost of $26.10. So if we look at the returns, I'm up 5.67%. all time, just looking at the share price. Including dividends, I'm up over 11%. But still looking at the unrealized gains, those came out to $765.23 this year. And dividends definitely added a nice boost on top of that, $316.20. And this does not include the dividend that I will be receiving later this month here in December. With those two combined, that's going to bring the total profits this year to over $1,000, $1,081.43. Now, sticking here with the ETFs, my second best performing position here in 2025 is actually just the S&P 500. It's VOO, which is the counterpart to SCHD in my Roth IRA. And in the past year, the S&P 500 is up 14%, really strong performance. And if we look at my position, I have 15.36 shares of VOO at an average cost of $475.14. So we've done pretty well with this one. I'm up 32% just looking at the share price and almost 35% including dividends. And then these profits are looking really good. As I'm sure you can imagine, most of them came from unrealized gains this past year. I added just over $2,300 to my portfolio in unrealized gains from VOO and also added $70.83 in dividends. And when we combine these two, the total profits come out to $2,415.37. Really, really nice. And now, guys, this is going to bring us to my best performing position for the year. This one admittedly surprised me a lot. It was actually one of the worst performers from 2024, and it really, really came back from the dead this year. More specifically, it came back from the dead just these last few months. It's been crazy. My best performer, guys, was Johnson & Johnson, a sleepy dividend king. And in the past year, J&J is up 44.25%, a really killer performance from this stock. And as we can see, if we just look at the share price chart, really most of these returns came in the back half of the year. I would say like starting mid-July is when it started taking off, and since then it's really just been on a run. Now it's just over $200 per share, and this isn't even the highest that we've seen it. And looking at my position, I have almost 41 shares of J&J at an average cost of $157.94, and believe it or not, there was a period of time earlier this year where I was actually able to average down on my position. Earlier in the year, or possibly even like later last year, it was below $150 per share. And during that time, I was swooping up some more shares. So I did have an opportunity to bring my average cost down, which is always nice. But anyway, with its crazy run up in share price, my returns here are going to be 27.66%. And including dividends on a total return basis, I'm up even more. I'm up 35, almost 36%. So my J&J position is doing really well. And with that strong performance, my unrealized gains with J&J came out to $2,351.27. Really killer performance. And I did pretty well in terms of dividends too. I brought in $155.78, which is going to bring the total to $2,507.05. Thank goodness for J&J. So there you have it, guys. My 5 worst performers, my 5 best performers. And when we add all of these together, that's going to bring the combined total profits between my 5 worst performers and my 5 best performers to $3,881.16 for the year. So overall, guys, 2025 has been really good to me. It feels great to be making money. And honestly, I'm stoked to see how the portfolio is coming along. We are approaching $120,000 as we close out the year. And I definitely did not expect that we would be there right now so soon. But at the same time, all of this growth does have me a little bit on edge. Whenever things feel too good for a while, I start thinking about what's going to happen when the market finally does pull back, and I want to be ready when it does. That's why in this next video right over here, I'm telling you about 2 stocks that are at the very top of my wish list. I will be loading the boat on these 2 stocks if and when the market does finally take a turn for the worse. So click right over here to find out which stocks those are, and I'll see you in the next one.